Well, welcome back to the Culture of Currency. We have right here the Wall Street Journal's year-end review and outlook. This is obviously a great newspaper if you love the markets and investing. And who do we see here? Everyone's favorite, Jerome Powell right there. Obviously, we see gold and different things here. This has a lot of information about it, but the idea is that Wall Street expects gold to glitter in 2025. I will paraphrase all this for you to give you the best information based on their experts, which, as we know, can sometimes be great and sometimes not. But they have some metrics here. Prices for the precious metal of gold rose more than 27%, which was $566.80 to end 2024 at $2,629.20 a troy ounce. That is better than the S&P 500's 23% climb and not far behind the 29% increase in the technology sector, which, as we know, went crazy. To go forward, we're just going to skim. I highlighted some things that might be of interest to you, but JP Morgan, Goldman Sachs, and Citigroup share a price target of $3,000 for gold, and as we know, they bought up a lot of that stuff, so I don't know if that's going to help manipulate it to that goal or not, but that is apparently what their goal is. So here's some contributing factors. We have estimated low interest rates coming. Analysts expect some portion of the $6.7 trillion held in money market funds to find its way into the exchange-traded funds, or ETFs, that hold gold, such as SPDR gold shares. This is the most bullish part of the cycle for gold. We also have geopolitical uncertainty. As you know, we've been in some wars, and this is talking about that. Donald Trump vows to escalate trade disputes with China and other countries. So that has to do with inflation flaring up and that type of thing. Possibly, investors in China apparently have been especially enthusiastic about buying gold lately. They've been giving the country's slumping economy and stocks, as well as the threats that Trump is levying, a reason to go in and get some of that fiscal tangibility. I have silver, but you know what it is. Next, we have central bank buying. As we talked about, central banks have been gobbling up gold, tripling their reserves since 2008. We'll get to these charts here in a second. In 2024, a poll of central bankers, 29% said they intend to increase their gold reserves, so we might see some more move there. According to the World Gold Council, the most since it started this survey in 2018. So it's not a very long survey, but it is still trending up. There's little industrial demand. This was news to me. I obviously know silver has huge industrial demand. I thought gold had a decent amount, but apparently not. Few beyond its store of wealth, like jewelry, that's one thing, but basically that's it. Gold doesn't have the industrial baggage that other commodities that could really get pulled down under this sort of trade dispute hit. That's what a JP Morgan official told them. And they talk about momentum that has risen by 20%, obviously. The only year which gold followed a 20% or better gain with a down year was in 2021, when prices fell 3.6% after gaining 25% in 2020. So here are the charts. Gold future prices, front month contracts, which have tremendously gone up. As you can see, those are our spot price right there. And gold future price performance annually, those are those little down years, as you can see, has been a climbing step upward. So that was an interesting thing, and the back page of this I thought was also interesting, if I can turn to it right quick. So this is the year in review, and we have the market's winners or losers. We see commodities in black right here at the top. So cocoa, coffee, and orange juice and natural gas, LNG, very high, very high. And these right here, these tech sectors, we talked about the tech sector being crazy. Those are both tech sectors. Gold lands right here at 27.48, and we have silver not far behind it with 21.33%. The S&P 500, which is an index fund, is right here. So they are either right at or above the index fund for gold and silver for our top 500 companies. So this shows you it's been a pretty good year. Here's the Dow Jones Industrial right here. And what I love, well, I'm not going to say I love it. I don't love it, but it is interesting to note look at all of these world currencies. Here's platinum way down here, by the way, in the negative 10%. But like the UK pound was negative 1.72 compared to the dollar. Chinese yuan, the Indian rupee, South African rand, the euro is all the way down here, negative 6. Swiss franc, Canadian dollar, Japanese yen, wheat is way down here. We know that that was impacted by Ukraine's war. South Korean, the Mexican peso, negative 18%. The Brazilian real, I wonder if that had to do with the BRICS stuff. I don't know. Why the dollar's epic rally has some room to continue. This was interesting because we also saw that though we had some inflation issues with the dollar, that the dollar completely destroyed all of the rest of the currencies, at least the main currencies that we're tracking here, which I thought was interesting. So I thought that was cool that, here we have some information for you from the paper. Because I'm old school, I do get this paper daily with the exception of Saturday and holidays. And so if you'd like me to pull things like this and talk about that, then I can do that. If you don't, that's okay too. I don't have to. But I read this and I thought, who would like to know this is my viewers, just some interesting tidbits. But as we continue to get our silver in, might be worth note to just know where we're going and where we were this last year. So thank you so much for watching, and as always, please remember to stay classy and current with the culture of currency.